Okay, welcome back. In this lesson, we're actually going to be discussing the PRZ. We're going to use a lot of the information that we've already discussed from previous lessons. And this one is going to also dive into designing a trading plan that fits you. Okay, so we're going to be talking about some of the things that you can do differently. Okay, that might sit better with your personality and more importantly, your comfort level. And that's what's going to determine which way you're going to kind of take your own trading plan, and you can try them both out and kind of see what you like better. This is a 30-minute pattern, and it's not one that, first of all, I'm recommending to trade, and it's not one I like to trade. The main reason why I don't like to trade this one is the distance between the X point and the B point. And we'll get into that a little later on when we talk about structures of patterns. But we do have a PRZ down here, and we can see that we have price that's currently kind of inside, kind of outside it, but it's going to serve the purpose for what we're going to do today. And that's going to be discussing where to put your stop. Okay, it's very important that you find an area of comfort where to put a stop, and that area that you do put your stop should give you information. Okay, so if you were to be stopped out of a trade, you are going to learn something. Because if you're not going to learn anything from being stopped out of a trade, there's no point of putting your stop there, or there's even no point of taking the trade, because one, you don't know what your risk versus reward is going to be. And two, you're going to second guess yourself, and when you're out of that trade and you finally get stopped out, it might run down like 5 more pips and start to turn, and you'll be like, oh shoot, maybe I should have stayed in, and you'll take another trade, and that will eventually lose as well. And I'm sure that if we're honest with ourselves, we've all been there. So where do you put your stop, and where are you going to learn something? Okay, so technically the rules, which, I mean, I'm not saying they're bad, but the rules are that your stop should be the next pip outside the PRZ, and that's going to be right there. Okay. Another way you can place your stop is by looking at the distance between the open and the close, and say this is, I don't know, say this is 20 pips. Okay. Looking at the distance between the open and the close, and taking 10 or 15% of that and putting your stop outside. And that works a little better on larger patterns with a PRZ, where you can kind of like say it's like 10 pips or so outside. But even on the smaller ones, like this being like a 30-minute, we can actually put our stop maybe say here. Now, when you do this and you put it outside the risk versus reward, sometimes what you'll see is fib convergence lines lining up towards the bottom. And you know, we all know like the Forex isn't perfect, and it might hit your pip, or depending on your spread, there might be like a little difference there, and you want to use this whole PRZ to your advantage. So you might put your stop just outside, okay? There might be times, you know, where it kind of like just sticks its head out and then goes back, and because you had your stop out there, you had that extra room and you were saved. And sometimes, you know, if you put your stop here, you save yourself from more downside risk. So it really depends what you're comfortable with, okay, when placing a stop. Some of the things that might help you decide, and maybe you might switch between the two, is if you have support at this level as well, you might want to put your stop just a tad outside, as well as if support was slightly above, you might want to put your stop right at where the pattern would be invalidated. And you still got to keep in count that risk versus reward from whatever point you're entering to your stop all the way to this B point, right? So you want to be careful that your risk versus reward will still line up, as well as different places that you can put your stop depending on maybe support resistance lining up, or other fib convergences being like near the bottom down here. That might cause you to move your stop just slightly out of the way. So it really all depends on what your risk versus reward tolerance is, as well as where a logical place is to put that stop. and a logical place would be outside of the PRZ, but as well as a logical place could be just a few pips outside further to give you a bit of breathing room if you do have those fib lines or support and resistance. And in this example, this is a fairly large PRZ. We're looking at about almost 100 pips. Price has already clearly validated it, and we looked at this chart in one of our previous lessons. Another way you might want to determine your stop placement when you have such a PRZ is either you cannot take the trade, or you can look at where the fib convergence lines are and do it just outside or possibly midway between them, hoping that this is going to be your point of reversal. And if not, then put your stop just outside at the bottom and hope that this fib, so you can take two shots at it, right? You can take two shots, you can take, very minimal risk between them. Maybe try another one up here, and then you're risking this much, instead of, entering at the beginning and risking this whole area, right? That's not something that we want to do. It's not very smart. So when playing a PRZ of this size, your stop placement's very important. And again, you want to be looking at where these fib lines are, okay, on the charts to see where your most likely chance of reversal is. Now, it doesn't mean this is going to happen all the time. You could see price, like come down here and not touch it and keep going, okay? But the point is, more often than not, you're going to see price, hang around one of these convergence lines and then go, and more often than not, it will play in your favor to break up your trades like this. Another thing you could do is scale into your trades as well. Okay, so like if you were planning to play this PRZ and you wanted to let's just say play 3 lots, you might scale one in just above this convergence line. You might scale one in the middle, okay, and you might scale one near the end, providing that your risk versus reward is going to be now from here to the stop placement as well. You have to make sure that this distance is going to be at least 2 to 1 to your B point. So you can scale in and you can get the best risk versus reward that you possibly can, and then use your B point as your target here, and then you can carry on with your trade that way. So as you can see, stop placement's important, especially when we're talking about fib lines down here. You might just want to place it just outside to, take into account your spread. And then as well, you will want to be looking at stop placements if you wanted to break up your pattern or if you wanted to scale in, right? So then you'd be using from here to your B point, and then your targets would be your C point and then your A point. So that's how you would go about managing stops. Now, as price moves in the direction that we're expecting, we're going to want to manage our stops going in the direction of our trade. And how do we do that? And it's a great question, and there's different ways to do it. So again, this is going to depend on your personality. You could move your stop up in every wave that happens, okay? So that, let's just clear the screen. We have, let's just say price moving up like a zigzag. As price moves up, you can put your stops below the recent lows, okay? So that's one way you can manage your stop. You can, if you wanted, use trailing stops, although I don't know if I'd recommend that way. I like manually moving my stops personally, but you can trail a stop and say, use the distance between the middle of the PRZ to the top of the PRZ as the range that you're going to use for a trailing stop. You can do that as well. I do know some people doing it that way. But essentially, you're going to want to move your stops logically. So you can either do the trailing stop with a fair bit behind and let your stop take you out, or you can use, like different waves and you can place it right below the bottom. Okay, so that when price moves even below this, that's the point where you have to get out. So that's how you can go about moving your stops. When do you move your stops to break even? That's a great question as well. And the way you would want to decide to do that can vary. And it varies because you might see a reversal point. Let's just say there was a doji here. Okay, in which case you'll want to move your stop to break even once you see a clear V in the pattern. Okay, so once price exits the PRZ, you might want to start considering moving your stop to break even at that point. Okay, so then you would move your stop up here, you would let it go, it might come up and then finally it hits B. Okay, that's how you might want to play that as well. I mean, in the last, 3,000 trades or so, we had about a 90% success that price would come into this PRZ and exit it. So if that's the case, if we use that information, we should be moving our stops to break even, which will be in your PRZ. We should be moving stops to break even after we see like some sort of reversal point and we exit the PRZ. Okay, and then we can place our stops to break even. And then we're in a risk-free trade. And most of your trades should be risk-free. Although some of them, they might not get to B and it might get taken out your stops. 70% of them do work out and do get to the B. So we have a 90% chance of it coming out of the PRZ, and then we have a 70% chance of it actually hitting your target. So that's pretty good news, but you also want to always remember to reduce your risk. Okay, so that means moving that stop to break even as soon as you possibly can once you have sign of a clear reversal.